Hi. Hey. Happy Chinese New Year and welcome to Traders Talk. And first of all, I would like to wish everyone a happy Chinese New Year and hope that you guys had a good celebration as we come into the year of the tiger. Yeah. And of course, the week, as you guys have seen, it continues to be very volatile in the year of the tiger, and this is what we would actually expect for the current year. But not to worry. Of course, the year have just started. And we have a long time some more. Another 12 months Chinese calendar, and of course, if you are English calendar, then there is another 11 months to trade and to invest. Yeah, and if you're just hooked on to the Traders Talk, welcome. And of course, please pass on to more friends so that more people can actually join us and they can also benefit to learn trading and also investing in the stock market. Yeah. And this is a show for people who actually want to learn trading and people who are also already trading the stock market. So we will actually give a lot of contents today. Is no exception. Yeah, today is no exception. All right. So of course, the year of the tiger have started. Again, as I said, volatility continue to be here. We can also see it yesterday itself, and of course, last week itself, we saw that the market was actually quite bullish in the first half of the week. It was actually quite bullish, but on the second half, of course, it actually gave up most of the upswing for the market, and of course, this week itself, when the market started yesterday itself, we actually were very happy because the market was actually green. Yeah, the market was actually green, and in fact, it actually went up. I think only probably the first 30 minutes or first hour of the session. Thereafter, things has not been so great. The S&P and also the Nasdaq index was actually moving sideways, and then later towards the end of the day, we see a huge sell-off, which I'll also show you guys in the charts later on what has actually happened. Just a simple trading day. What kind of market we are actually facing nowadays? And of course, with this kind of market, uh, as the current show is titled "Gone Fishing," right? Gone fishing. So it depends, as I said, whether you are a trader or investor. I mean, if you can, please put on the chat if you are a trader or if you are an investor, because of course, on both sides of the perspective will provide different kind of opportunities or also threats. Yeah. We'll see how to actually play the markets with this kind of market volatility continuing as a trader and also as an investor. Yeah. Okay, let's move on. Yeah, also the other thing is the currently is also the earnings week, and of course, we also saw some of the big caps have already made their earnings announcement. Some interesting and some not that interesting. Of course, if you have actually benefited from some of the rebounds of stocks post earnings, then that's great. And of course, if you had a very bloody day, getting hit by some of the big caps, which has actually very bad. I would not say bad earnings, but so post earnings reaction was actually bad, which we will also speak about later on in the show. Yeah, and of course, let's put on the market. Okay, so So you look at this S&P, right? Actually, yesterday was down by 16 points. Not a lot, not a lot, but as you can actually see, this is actually the S&P, right? Let's put this up. As you can actually see here, this is the S&P 500. Is actually closed at 4483 yesterday. Yeah, and as I said earlier, last week it was actually uh, bullish. It actually went up all the way to about close to about 4,500. I think close to about 4,006. Yeah, it actually went all the way up, rebounding from the lows here, where it was actually trading sideways for a couple of days. Then it rebounds. It rebounds up, and then later on, it was actually hitting resistance here, and then it came down towards. Till yesterday, it was down. Yeah, it was down. But of course, if you can see the candles, the daily candles, right? What we continue to experience is actually the what is that called? The daily volatility. The daily volatility. Yeah, you can see that a lot of the days they actually represented by huge long candles. Huge long candles. Yeah, huge long candles. Okay, let's see the other thing which I actually wanted to show you is the intraday movements. Let's see. This is actually the minute chart. Yesterday was actually 7, right? 7 7. Okay, this is actually the uh, daily chart. Yeah. So you can actually see that the day started somewhere here. Okay, the day actually started somewhere here. 7 February here. Okay, the market actually started somewhere here. Yeah. Let's put it here. Let's make this bigger. Okay. Here. Okay. Okay. The day actually started somewhere around here, where it actually opened open higher. This is the minute chart. That means this whole chart is actually where the price movement was for the day yesterday. Yeah, for the day yesterday. If you can actually see here, the price has actually started very bullish, very bullish. This was the close. Okay, it gap open, gap up from last Friday's closing. It gap up, open probably at about 4505. Yeah, 4505. Last week closing was somewhere around 4,500. Yeah, so it opened up here, somewhere around here, and then you see that it has actually moved down a bit, and then later on it was actually going all the way up to about 4520. That means about 10 or 15 points up. Yeah, about 10 or 15 points up. That was actually about first an hour and a half of the session. Even within that time frame, right, you can also see that the market was actually, the prices of the index was actually going up, going down, going sideways, coming down, and then suddenly it was actually very bullish. It went up. Yeah. Then post that, it traded down again. It traded down again to the 2 to 3 hours of the day. 2 to 3 hours. This was probably until 11 12 1 3 to 4 hours lah. Yeah, 3 to 4 hours of the day it actually traded to negative position down to about 4480. Yeah, but post that you can see that it rallied up again. Yeah, it rallied up again, reaching the previous high during the opening hours. Yeah, and towards the last almost the last hour of the market, right, there is actually a sell off where the market actually went down before it recovered up a bit. Yeah, so this is only a day trend, and of course if you look at the other days, right, other days, you will also tend to see this kind of choppiness. Of course, this was Friday. Friday was a bit better, where most of the day was up, and while you are sleeping, you thought you would get good, how to say, a lot of greens, right? But again, before the market closed, right, towards the last hour, again a sell off towards the last hour. Yeah. So these are typical movements during the day. So of course, if you are trading, right, if you are trading, then the position which you have is actually going to be quite volatile. That means at one point in time, you can actually see that, oh, maybe your P&L is actually positive, or the trades you just entered is actually positive, and then you went to sleep happily, and when you wake up, right, you see the opposite of it, and all your trades actually gone bad on the opening. That means when you wake up the next day. Yeah. So that is actually quite common nowadays. So as a trader, of course, how to say, the volatility will actually impact your P&L. Which will result it to go up and down every day. So like I said, actually, a couple of weeks, or even in most of our shows, right, what I've actually said is that if you are actually trading, right, I mean, we tend to now go on shorter. If you're trading directional, then we tend to actually go on very short trades, very short trades. That means basically you're talking about 2 to 3 days kind of trades, and of course those can actually be, as I said, mostly debit trades, and these are spreads. That means basically I would tend to shy away from just doing a pure call. That means a pure call, mainly because of course the decay would actually be faster if you are actually holding a pure call. And of course, if the market move against your direction, that's the time where the option value would actually reduce by a lot. That means you actually go into losses faster if the what is that the price move against you. But of course, if you are doing a spread, then the other side, the short spread, the short call, if you are doing long, the short call would actually cushion a bit of the negative movement of the share price. But of course, eventually you will still need to actually be correct directionally, and also within a short time of span before the option actually expire. The option actually expire, and of course, holding it to the end of the maturity, for debit spreads will also be a risk. Because you may have a very positive position of 70-80% profit for your debit spreads, but one quick move against you towards the end of the maturity will actually wipe out all your profits. In fact, it can actually also result in losses in your trade. Yeah. So again, whether you are doing spreads, or whether you are actually doing debit spreads or credit spreads, then of course, as I said, the timing of the trade, once you have profits, once you have some form of profits, reasonable profits, whether it's 30%, 50%, you can already take profit, and actually exit the position and try to establish new positions, instead of continuing to hope that your P&L for the trade to actually continue to go up. Yeah, because the market volatility will not help you in terms of getting more positive profits if you are trading those type of strategies. Yeah. So this was the S&P movement yesterday, and of course, if you look at the Nasdaq, right, it is also similar, where you can see that this is the day, what is that? The day price movement, where at the start of the market, the price has actually gone up, and then it came down towards the middle of the trading day. It went up before the end of the day, the last hour. The market sell off again. And of course, the thing which is a bit different. How to say? In terms of the market movement or the market players is whenever how to say, whenever um, the people actually see opportunities. That means if the price actually gone up, people would also take quick profits. Will also take quick profits. Yeah, and then they actually close off positions once. They actually gain profit, and then I think they are also playing very short term, what is that, short term plays. And of course, for those people who are trying to exit positions, of course, when the market goes up, then that provides them with an opportunity to exit their positions, or to actually cut loss, or to actually recover some grounds in the positions. Yeah, so this, I would think, is how, in my view, the market participants are actually trading now. Yeah. So this is my personal view. Yeah. And of course, the other thing, you can actually see this kind of trend in some of the stocks lah, some of the stocks. For this example, I'm actually showing you this stock, Intuit, right? Intuit. Okay, Intuit. If you monitor these stocks, right? The day movement for this stock is actually also very high. And of course, if you are actually a day trader, I mean, these are also opportunities. Can also be a threat, depending on whether you are in the right direction. But of course, for this stock, for example, when the market is actually bullish, when the market is actually green, I would normally see this stock going up. When the market is green, this stock would actually go up, and of course, it go up quite a lot. I mean, like yesterday itself, right? Like yesterday itself, you can actually see the market only went up by in the earlier part, maybe 10 points, or less than 15 points. Yeah, and for the stock, you can actually see, from the opening, right? This was closing. Yeah, from the opening here, right? It actually went all the way down here. From the opening to here, right? It actually went up about 11 dollars actually. Okay, here this is the price. I already put here. So this stock actually went up by $11 within the first less than first 1 hour of the trading session. Okay, so it went up by $11. Okay, and then of course, when the market was actually moving the other direction, coming down, right? That's the time where you actually see the stock actually move back to give back all the $11 profit which it has actually made. And towards the middle, when the market goes up, it went up again, although not back to the $11 price. It also went up, and then towards the last hour of the market sell off, it actually came down. Yep. And the net movement for the day, from up of $11, right? The stock actually only closed about I think only closed about less than $1.50 or 40 cents. Let's see, day price. I think it actually closed about 126. It actually closed about 126. 126 up. Yeah, 126 up. Okay, so this stock actually closed about 126 up, against going up by $11. So you can actually see the price volatility for certain type of stocks is actually also very high, and that's where also as I said, if you are moving to shorter time frame to trade, of course this type of stocks which actually move how to say, a larger percentage, and based on bullishness of the market, that's the time where of course you can actually benefit. And of course there is also risk, like, I mean, it can also go the other way very very fast, as you can see. Last week, it also, this was actually the from 3rd of February, right? The price was actually 562 and it has actually went down to about 533, so about 20 over dollars down within 2 or 3 days. And then of course when the market went back up, you can actually also see that the price recovers quite fast, also based on the market movement. Yeah. So this is one stock which has also high volatility against the market. Yeah. So of course, other things like how to say, for example, if you're talking about other stocks like Google, right? Google. Okay. So as a trader, what do you do on Google? I mean, Google just announced earnings, right? Just announced earnings, and of course, post earnings, the earnings was actually quite good. They surpassed, right? Surpassed about 10% surprise earnings. Yeah, up. And of course, after that, the stock moved up by, I think it was about 300 over dollars. You can see that the price actually moved up here, right? Yeah, the price actually moved about 300 over dollars post earnings, right? So it kept up after earnings, it kept up. Yeah, but of course, once the market came down, and especially after their brother, Google's brother, Meta, right? Meta went down over 20%, right? That spooked the market, and of course, Google gave up its gains, gave up most of its gains, coming back to almost pre earning price. Yeah. So of course, if you, as I said, what do you do? I mean, if you are not up to this kind of volatility, and if the style of trading is not what you want, then it's better for you to actually stay out and just relax, chill, and go and watch Netflix. In fact, Netflix, I watch more Netflix this during this period because the market has been so volatile. So of course, as I said, after the first hour of the market open, right? I mean, that's where, I mean, whether I can see whether I want to actually trade in or I don't want to trade. So I mean, most of the time, the positions or the things which I actually put on would tend to be lesser during this time. So I go and watch Netflix, new movies, Korean movie. There's a new zombie movie. Korean like zombie, right? There's a new zombie movie which is actually also quite good lah. I mean, if you have not watched it, you can actually also watch that movie. And of course, there are other nice movies on Netflix. And please help out Netflix a bit lah. Because Netflix, if you remember Netflix, like, yeah, Netflix what is that? The subscriber base did not meet their expectation, right? Yeah. So of course, because of that, the Netflix actually sold off also by 20 over percent about 30%. Netflix sold off by 30% because the subscriber growth was not what the market expected. They did not meet, right? Then Netflix sold off about 30%. Same like Facebook, how to say, they did not meet the daily active user base by just a little, right? Just a little. And the market sold off by 20 over percent. 20 over percent. I think now probably even lower because yesterday itself, Facebook again lost another 5%, another 5%. So of course, if you are an investor, then again, you might not want to go and watch Netflix. You might want to actually see whether this is a time where you want to actually add in positions in Facebook. In Facebook, I mean, generally, if you talk about Facebook, right? I mean, I mean, basically, the overall the business is still, I would say, still intact. Okay, the business is still intact. They have billions of cash. They have a lot of bullets to actually grow the business. And of course, the advertising revenue, they still earn, I don't know, 40, how many billions of 40 billion of revenue, advertising revenue. And that's actually still a lot of money. And no competition is near them, although it is actually, it can actually reduce, or in fact, it has actually reduced because of Apple iOS change, which screwed up their placements of advertisement. Less people can actually have option not to see the advertisement, so they are actually getting less so-called views, and I think they lost how many billions, 10 billions of revenue. Yeah, but still they have a sizable revenue, cash they have. And of course, opportunity wise, they have a lot of money to actually spend and invest in the new business, the metaverse business, whatever that is. Okay, a new potential business for them. That they can actually do. How to say? Huge future potential. I mean, I would say a lot of companies would actually want to go in this as new, with lesser capital to spend and whatnot. And of course, if you are actually buying into future, right? Why don't buy into a company, of course, which already have a sizable business at the moment? Yeah, it can be declining, it doesn't matter, but of course the future potential can actually provide much more rewards, just like Facebook about 10 years ago. I mean, basically, where was it 10 years ago? I mean, basically it was actually also not a very expensive stock, right? But today you can actually see it has actually grown into a very huge company. Let's see. Yeah, this is actually the 10-year, no, the monthly price, right? You see, so this is actually the price since listing in 2012. They just started with $29. And of course, even with the 30% decline, right, they are also 10 times return in 10 years time. Yeah, 10 times return in 10 years time. And of course, if you look at the price, the monthly price chart, right? So this is the, I think, 50 moving average. Yeah, 50 moving average. Yeah, and of course, the past 10 years, okay, you only see it dipping into this 50 moving average three times. Okay, one here is actually in December 18th, and then the second time here is the COVID time in March 20, and this is actually the third time. So whether you take this as a buy opportunity, okay, if you look, say, 10 years later, 10 years later, if you look at this, right, this is 10, okay, three chances for you to actually buy in, and each buy in you would have the price would have actually increased. So this is 1, 2, 3. So this is the third time. Okay, whether you believe 10 years later, how to say, these are the solely the how to say, the bigger retracement where you can actually get a bigger upside post that is going to be something whether you believe the company can actually give you or not. I mean, as an investor, I still think it's a great buy-in, and of course, during this retracement, we have also put in some new investment position as an investor. Of course, as a trader, you actually would actually take different kind of view. And of course, as I said, because of the volatility, right? I would not take I would I would tend to shy away from just taking a, a straight call position on companies right now, including Facebook lah. Of course, you might say that there is actually yeah, huge upside potential, but you would not know how long it can actually drag along, how to say, sideways moving. And of course, because of the time decay of calls, right? If you are not careful and if there's any thing happening, say if you're buying a 60 days call, right? Say you're buying a 60 days call, and after 30 days you're making profit, and come March, right? Come March, when the discussion, not discussion anymore, it is when the implementation of the rate hikes come in March, then of course, if they slam the market with 50 basis point increase, then the market would not like it. There might be a sell down somewhere at that point in time, and of course, whatever you have made on your long haul might diminish straight there and there. You might lose it all. Yeah. So of course, trade wise, I would tend to shy away from strict calls. Debit spreads is okay. Debit spreads is okay. You can actually do debit spreads. That means whether $5, $10 width is okay. Short term, just to play quick rebounds, like quick rebounds of Facebook. And of course, the risk wise, the risk which you would take on say $5 with spread would probably be around $2 to no more than two, should not be more than 250. Yeah, between $2, 250, or 150 to 150 to 250. Yeah. So then you still try to actually get 1 to 1.5 kind of risk reward for debit spreads. Yeah, for debit spreads. And of course, if you are selling premium, then put spreads is not put spread. Yeah, put spreads. You can actually do put spreads also to actually how to say, play on the huge sell off of Facebook, right? Huge sell off of Facebook, where you can actually place strikes another, say 10% below the current trading price. That means if you're doing credit spreads, say a bull put spread, right? You can probably go all the way up to about, say, $200, $200, say another 10% buffer. That means it has gone down by 30%, right? It will have to go down another 10% in order to hit your what is that? Hit your short strike here, short put strike here. Yep. And of course, if you're doing a credit spread, time will work for you, even though let's say, for example, if you do it on 200, right? Even though short term, if you're doing a, say, 40 or 60-day trade, right? Short term, Facebook might actually even breach your short strike, because the momentum for sell off is still here. Within these few days, there might be more sell off, because yesterday it went down by 5%. People might still have their margin position not covered. If the market continue to go down today, I would say Facebook might continue to actually go down because of the selling pressure and probably margin covers that people might have, because this stock has actually dropped by almost 30% now. Yeah, and of course, even if it actually drops down, with time in favor for you, you might play a recovery of the price. But of course, risk is still there towards March. Risk is still there towards March. Any positions which you enter, even on credit spreads, try to actually exit it before March, because otherwise it may go up in February, but when the um, rate hike decision comes in March, then of course the market may sell off again, and price of stocks like this may drop. Okay, so yep. So trading, investing, both provides opportunities. It depends on how you actually want to benefit, and which type of uh, of trader, or whether you are a trader or whether you are actually an investor. And of course, for me, or for many people, we are actually going on two sides. We are both traders and also investors at the same time. So we tend to have a lot of activities still. Okay. Of course, if we trade less, then that means we have how to say, we have more time to actually watch Netflix. If we trade more, then of course we will spend more time looking at the market, or analyzing some price movements for the stocks. Yep. So I mean, that's Facebook. I mean, a lot of things happening. You can see other things like Snap, right? Snap Snap made these earnings after Facebook. Okay. And of course, the position for Snap is actually totally opposite of Facebook. Okay, opposite of Facebook, because Snap have actually went up by 50% post earnings. 50% post earnings. But of course, if you really look at the price, how to say, the price movements, right? Actually, Snap did not move up 50% lah. It recovered. It actually recovered losses in the past week. If you are measuring the price action from the time of last week, yeah, you can see Snap actually went up here, right? And of course, after Facebook made their announcement, it actually gapped down together. Yeah, it went down, and after the positive earnings came up, Snap actually had made back some recovery of its price. Yeah, so it actually technically it actually moved up from 33 to 37. Only $4 lah. Only $4. But of course, it came back from the lowest point up. Yeah, and of course, Snap is a very how to say, if you guys got hit by Snap, right? The earnings before that was actually here, where it actually kept down, and it continued to went down. And of course, now it made some recovery, but again, for it to actually go back up to previous high, I would say at this kind of market environment would be quite tough for it to happen so quickly. Yeah, maybe it needs some time. Yeah, and of course, if yeah, if Facebook is looking for growth, maybe this is again the shareholders of Snap would actually get a second chance, to sell to Facebook, if Facebook wants to buy it because in the past Facebook wanted to buy Snap, right, and Snap didn't want to sell, right? So I would say by itself the price will be quick, difficult. But of course, with so many M&A activities going on right now, especially on stocks which is actually having problems, or big companies, like I mean big reputable companies which is actually having problems, or its price came down a lot, then it becomes attractive targets for other companies looking for growth. The other one which was on the news was Peloton, uh, where I think two companies wanted to buy it. I think one, it was Nike or something, Nike, and the other one I forgot. Yeah, and of course, because of the news, the price also went up a bit since last Friday. Yeah, I think the news was out last Friday, and yesterday, together with their earnings, the price actually went up. But again, please see the price movements. Right, it came all the way down from 120 all the way down to almost about 20 over dollars. Yeah, so these are the COVID stocks lah, yeah. During the good times where people get stuck at home, these are the stocks which fly high. And of course, when they are now bought with their bicycle and bought with sitting at home, these are the stocks which how to say, these are the stocks which get hit quite badly, because no one wants to how to say, continue to ride a bike um, with a small screen, uh, whether it's a handsome instructor or whether it's a beautiful instructor. People don't want to see it on the TV anymore, or a small screen. People would tend to want to actually go into a gym to actually exercise. Yeah, exercise. So again, big movements in the market, as I've said in the previous few talks, if you are trading, um, trade in smaller size, less trades, that would actually keep your portfolio in a how to say, in a safer mode in term during the time of volatility as a trader. And of course, as an investor, this is the time where you would actually want to decide which are the stocks which you actually want to allocate your funds. Yep. So last week, I did mention some of the stocks which we are we are looking to, not looking to, we have already bought in during the past 2 weeks, and we continue to buy in. And of course, these are our personal trades, not a recommendation, but just to share with you guys. Some of the trade which you can do, trading, and also on the investing side, for those who are not traders, or those who actually want to stay away from trading during this time because of the volatility, and do a bit more investment. Yep. So these are also opportunities. Last week we did speak about Microsoft, right? Yeah. Last we did speak about Microsoft, and of course, again, because of the sell off since last week, right? Last Thursday, right? The market actually came down. Then, of course, on Microsoft again, it provides another opportunity to add in positions if you do not have positions, because Microsoft is a great company. Everybody uses Microsoft. I think most of the companies did not give so much positive expectation on the subsequent quarter growth, except Microsoft was still giving a very bullish outlook in terms of its business. Let's see here. Okay. So Microsoft is currently trading at about $300. Yeah, $300. Yep. So last week it went up. It went up, right? I mean, when the market went up, it went up together. It was actually trading at about 280, up to 280, and then it was trading at range about 300 to 310, highest until last Wednesday before the market sell off. Then of course the price again came down to 300 level, and of course today, depending on the market, um, the market today, no, I can't see here. Okay, let's check. I think it was futures was green earlier. Oh, now it's already red. Okay, again, if you look at the price action yesterday, market opened slightly red down, and then it went up very fast. It went up very fast. Yeah, only towards the first hour of the day it went up, and then after that it went down, and in the middle of the trade session, that means 2 to 3 hours on, the market went up. So that was yesterday price action. You can monitor today's one if you are not sleeping lah. I mean, if you don't, if you're not sleeping, then of course you can watch Netflix until 2 3 a.m. and also at the same time just monitor the price action of SPX. Okay, so Microsoft sold down yesterday. I think it went up. You can see it went up all the way to about 308, all the way up about. No, it actually opened at what's the price? It actually opened at 306, 306, and then it closed down by about $5 to about $301, $301. Yeah. So again, when it dipped to 300 yesterday, some more positions on the investment portfolio went in at 300. Yeah. So this is the range. This is the range which we are putting on some of our investing portfolio. Yeah, so this is actually the range, because I mean at the end of the day, whether you pay $5, $10 extra, right, for a long term buy in, right, I mean it actually how to say, it does not make much difference lah. Yeah. And of course, Microsoft went up to about 350 highest, right? So 350 highest. So basically, you're talking about almost about 15 to 18% here. Yeah, back to the earlier price, right? So it retraced now to by about 14, 15%. Yeah. So it retraced about 14 to 15% down, and of course, Microsoft being Microsoft, right? The price movement, right, is normally very how to say, nice. This time round it's a bit bad, right? So when it's bad, right, as an investor, that's where you can have good opportunity. Huh? When things are good, you will never be able to buy in, right, when things are good. So when things are bad, that's the time you want to do. Okay, Han Hok, Dave, PayPal. Okay, PayPal is a very sad story lah. PayPal is a very sad story. Okay, PayPal is a very sad story. Okay, because you can see PayPal has actually lost a lot. From here to here, right, is about 60% down, you see. Okay, 60% down. I mean, PayPal, of course, PayPal is a big company, it's a good company. I would say being in the payment how to say, if you are investing in payment services, right, I would say, because the risk for it to come down, it can come down some more lah. I mean, you can see that it continued to actually come down, right? Even the trend have already turned bearish. The trend for PayPal has already turned bearish, and if you look at the support levels, right? Technically, there is no so-called long-term support. It's actually going all the way to pre-COVID prices of $82. $82. Yeah. And of course you can say that well, this might be this might be one how to say, this might be one level where the price might support, but you can see that it has also already breached down. Earnings was also not too great, right? Not too great. I would say again, without anything new for PayPal, right? Without anything new for PayPal, that means new business, new stuff, like, I mean, I would say they need to hype. I mean, this talk can only hype, and of course, during this time, even if you hype, people would tend to be a bit risk averse, lah. Unless there is something which interests the big thing coming PayPal, which gives it a boost, right? I would say uh, there are other companies which you can do if you want to invest in payment services, lah. To trade, maybe possible to trade, yeah. But as a investment, perhaps Visa can be a better one. But of course, Visa has already price have already went up a lot. You can see here again, it actually topped the previous high, right? And then now it's actually retracing down. And of course, comparing the two, if opportunity comes back on Visa, I will take Visa. And of course, the price for Visa would be at the level of about 200 here, 200 and below, lah. Yeah, Visa. Level 200 and below, I would say would be quite okay price. Of course, if you want to wait longer, you can actually wait back to the previous low of about 195. 195. But if the market don't turn bearish or don't go down, continue to go down, right? I would say Visa might not come back to this level. But of course, if the market comes down, then opportunity might again be there for you to actually add on Visa. Yeah. I mean, although I say this, right? I mean, I also have positions, trade positions on PayPal, which I'm also trying to recover, lah. Yeah. So I'm not getting in anything new apart from what I have previously. Yeah, what I have previously. And for Visa, I mean the trade which I had already closed it. I think it was last week. Yeah, already closed it before the retracement came last week. Yeah. Anyway, the Visa trade which we had was also a repair trade, which we carried on for quite a long time since when the price actually came down during this time. Yeah. So we carried on, and when it rebounds, right, we were rolling it, and when it rebounds, then of course that's the time where we exit the trade. So Visa is one. Mastercard is another payment company, right? This is also a good stock, but of course, again, the price is now toppish. The price is not now toppish. If it comes back down to about 300, 320 level, you can also look at Mastercard if you want to go into payment companies. Money Visa can buy. Yeah, Visa can lah if it comes down again lah. If it comes down again, because Visa and Mastercard has already gone up. What is that? PayPal. Never used PayPal before. Heard not so safe. I use PayPal. I think it is okay lah. I mean, as a user of PayPal, is okay. But of course, if you are a merchant, I would say a big part of the payment business for PayPal has already been taken away by companies like Stripe. Stripe. Yep. Other payment services company. Yeah, it has actually been taken away by other payment services company, eating into its business. Like I said, if you don't get into anything new, I mean, new. It tried to do Bitcoin and all these kind of things, lah. Yeah. So as I said, that is the hype kind of thing, which it wants to generate more interest in the company, lah. Yeah. So if you don't go into new things, if it continue to be there, I would say um, a lot of companies are eating into PayPal's business, lah. So that's where I see it. And EV stocks, okay, EV stocks. I am, how to say, I am not into how to say, I there are some EV ETF lah. There are some EV ETF, but I would say the what's the EV ETF? Let me check. The EV ETF is actually uh what's the ticker? Let's see. EV ETF. Okay, EV ETF. Okay, LIT is one. LIT. Let's look at LIT. I would say EV ETF price have also come down. LIT, sorry, LIT. EV stocks price have actually also came down. You see, sell down already a lot, and I would think that again, together with all those so-called um, um, I would say hype kind of thing lah. People would risk off already risk off the position. But of course, if you say this is an opportunity when it hits here, right? Yeah. I would say if the market continues to go down, this would tend to follow suit. You see the price movements is again very similar to market yeah, yeah. Last week went up, then come down. Last week went up, come down. Yeah. So of course, I would tend to also stay away. I did some trade for EV. I think two maybe last month. Yeah. I did enter into this LIT, but I exited it quite fast. Quite fast lah. lose money because I think the market did not turn. That's the time where I cut the position for this ETF. Other EVs like new Tesla, Tesla is again. I mean, whether you see opportunity or not, I don't trade Tesla lah. Yeah. This new again, you see a sell off again to $23. New is going down lah. Tesla is again very volatile. Every time this Elon Musk give an idea, things move lah. Things move every time he talks about whether to sell or ask people for opinion. His stock price would either go up or go down. I think earlier it went down, right? It actually went down, right? By about 10%. Yeah, here. Yeah. And then actually it rebounds up. It rebounds up. I think if you look at Tesla, if there's no news, if there's no particular news, right? Anything at 800 levels, this level, I think previously it went down to this level, right? Previously it went down to this level, right? Yeah. And then after it went up, right? Again, now it went down to about 800 again. I think a lot of Tesla supporters lah, a lot of Tesla buyers lah, yeah, buying on dips lah. But of course, at which dip you see? I mean, 887 was here. Then it went down to 800. So $87 below the previous low. 87 below the previous low. Yeah. And of course, after the huge reduction here, it recovered some positions here lah. Yeah. So that's Tesla. So volatile. I mean, depending. If you want to how to say, if you want to trade this you can do spreads lah. If you want to do spreads, do spreads at low when it dips to certain level, right? There's no 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 indicators of where is support here. See, the only indicator is this 200 moving average, 200 moving average. Yeah, which it has already dipped below and went up. Yeah, the next time it comes, possible, you actually can put in how to say trade step. Yeah, Square. Square. Square is also very volatile lah, and you can see that Square is on a downtrend. Yeah, this is again very how to say pandemic kind of stocks, right? After here, after here, it actually after the last earnings lah. I mean, after the last earnings, it actually went down. I think it's going to announce earnings soon, right? It's going to announce earnings soon, and of course, the risk for companies like this is that the growth expectation, once it is not there, right? Once it's not there, it can be again a big sell off at current market conditions. So I would say, how to say, now it's at 100, right? It's at 100 dollars. Where did it came? It's only $30 last year, right? Before that it was only 50 over dollars. Yeah. So of course I am not getting into Square. I'm not getting into Square. uh, I would tend to work on safer companies lah. Yeah, safer companies like Microsoft, Google. Yeah, Google. Yesterday also we add in some positions at 2008. I think 2008. Mainly, of course, because of the how to say the retracement from a high of about slightly above 3,000 plus, right? We retraced back to pre-earning results, and of course with the stock split, right? It again give give it a bit market momentum to actually go up pre-split. Yeah, pre-split. Okay. Tesla battery. Okay, Tesla battery is not new, right? I mean, I'm not too familiar with Tesla's business, but I think Tesla's battery is not new, and from the past I read, it's not that good, right? They burned down some how to say factories or what? I don't know. I'm not familiar with Tesla thing. Okay, of course, lithium is one how to say uh, one industry lah, one promising industry lah. Yeah, if I would to trade, I would go on ETF lah. I would go on buying lithium companies ETF, so that we don't get a single company volatility for such kind of business. In fact, nowadays, if you talk about uh, if you were to choose, if I were to choose to trade, right, um, to be safe, ETF would be actually safer positions for you to actually trade if you want less volatility. I mean, in fact, if you were, for example, if you are buying a single stock like Facebook, right? So of course, Facebook go down by 20%, and of course, even if you talk about Facebook in ETF, like Facebook is in which ETF? Uh, I think it is XLC, right? Facebook is XLC. No, yeah, Facebook is in XLC, right? Okay, so if you look at XLC, right? How much did it sell off the other day? It went down by $6. It went down by $6. So basically, you're talking about here to here. Not this. XLC. Use this. XLC. It went down about 8% because Facebook is about 20 over percent, 22, 23% of XLC. Facebook sold down now 30%. XLC only went down by 8%. So of course, if you are trading in ETF, if you are buying ETF, that tends to reduce single stock volatility. Yeah, single stock volatility. Yeah, but I did not buy into XLC. The recent one which we did was XLY. XLY. This is the consumer. I think last week we put in some positions here. Yeah, XLY. XLY. This is one. Yeah. XLY is one. Of course, if it comes, if it retraces a bit, of course, there are more trading opportunities again for XLY, and the other one is XLV. Yep, the healthcare one, which also had a huge sell off of about 12%, right? I mean, 12% movements for ETFs are actually quite big now. Yeah, XLV was another one which uh, we had put in some, not at this level. I think it was slightly higher somewhere here. I think, yeah, somewhere here. Yeah, so this tend to reduce stock volatility, especially during earnings period lah. Especially during earning period, uh, uh, don't trade on stocks which are going into earnings unless you are doing earning trade strategy lah, which I think at this time, in this kind of environment, right, it's quite risky to trade earnings because the movements are very huge, very huge, and don't do naked positions on earnings. Yeah, don't, I mean, try to stay away. Yeah, because once it gets hit, it's actually quite bad. Yeah, so that's how we are playing it. I mean, as a trader, yeah, I would tend to go and use more of my time watching Netflix because I trade less during this time round. And of course, as an investor, then of course, this environment would be good time for you to actually go into great companies. Yeah. So yeah. So which one are you? I mean, if you are a trader, just work on getting used to the market volatility, and of course, your trading patterns and trading strategy need to be changed a bit. You can't use what you were using last year, because the last year was actually a monthly movement. Monthly movement. That means the volatility comes every month once. Yeah. And of course, nowadays it is daily movement. Daily movement. Yeah, it comes every day, and within 3 hours it changes. The trend actually change. So as a trader, need to actually be a bit more nimble, and of course as an investor, take on opportunities where you can find to add on great companies. So okay, that's all we have. We also gone overboard. There's so many things to talk about. Talk about nowadays, and of course things can actually be more interesting, more interesting for us in this market, and it also can be very dangerous for us if you are not actually careful about our trading or even our investment positions. So that's all. If you have any comments, please put on the chat box. I can reply you after this. I won't go on anymore. Overboard by some time. Won't take too long of your time. Yeah, and of course, please also also share and like this buy some and trade some, no option. Wait, go and watch Netflix. Go and watch Netflix. Enjoy the zombie movie. Yeah. So if you're not no issue to actually wait for better opportunities to trade. Yep. So I'll catch you next week, and of course enjoy the rest of your Chinese New Year week, and I wish you guys stay safe, and happy Chinese New Year again. Yeah. Bye bye.